How's it going, everyone? It's Sam. Today we're doing another portfolio review, and I've been doing this over the last 2 weeks now for some of my Patreon members. If you want to get your portfolio reviewed, you can join our Patreon. The link is down there. But today we're looking at John's portfolio. He just started it up with a stimulus check, so he did something similar to what I did, where I invested my stimulus check in some different dividend companies to hopefully pay me monthly dividends for the rest of my life. He also added three deposits of about $50 each. So all in all, he's putting about $1,350, and he's up about $800. So a great return. This is something that really a lot of people, I think, had similar results when they were investing back in March, especially if you were smart enough to invest when the market was down. But he's made some really good picks. I won't discount him on that. He's made some really solid investments, and a lot of the stocks that he's invested in have gone up dramatically. So if you don't mind hitting the like button, I really appreciate it. Also, let me know if you like this format. Last week, I put in what I was buying in the same video as this portfolio review, and I think that was a little bit lengthy. It was about 20 minutes. I felt like that was a little bit too long, so I separated them this week. Let me know what you think about this. I really appreciate it. And again, use those Patreon links, or if you want to start investing with M1 Finance, I really appreciate that too. That does a lot for me and for the channel because it is a referral bonus that I get. So if you want to start investing with M1 Finance, they are my favorite broker. That's the one that I use pretty much for the majority of my money. So there's a link down there in the description for that too. So let's get into John's portfolio, and we'll go over kind of where he's at now, how old he is, and just his stock picks in general. So we'll start with the stock picks. So as you can see here on the left, his investing portfolio is at $2,155. So a pretty good starting amount. He's about 30 years old, he said, and he just put in this $1,350, so he's up massively over the last couple months. As we can see here, he has half a share of Google, which is obviously a majority of his portfolio. So that is about $820 of the $2,150 in the portfolio. And then he's got about 14 holdings or so throughout the rest of it. But as the main stock that is holding this portfolio down, I think Google's an awesome stock. So over the last 6 months, I don't know exactly when he bought in, but if he bought in around when he got the stimulus check, he bought probably around $1,200, and it's up about 35% since then. Google is just a great stock to hold. I think it's one of those FANG stocks that is just going to always do pretty well, right? So it's probably never going to go up 100% in a year, but that's not what you're looking for. You are looking for steady growth, and Google provides that. They have so many different businesses that they are a great company to hold in your portfolio. They're actually a company that I held on to, but I was looking for some more growth in my Roth IRA, so I sold them, and they've done really well since then, right? So they've gone up 35% throughout the year. They're a great company to hold. The next one is Peloton, and you're going to kind of see a similar pattern throughout this. Peloton is another company that's done really well since the pandemic, right? So they've gone from maybe a $30 stock or so when he bought it to a $76 stock now, so up about 150%. Great company to own right now. I mean, with everyone not being able to go to gyms, they've done really well. I think a lot of people will buy their products, get their subscriptions, and kind of hold on to them because it is a lot easier than going to a gym, driving 10 minutes, or maybe you live farther away from the gym. Here in West Michigan, we don't have to drive very far for many things, but maybe you have to drive half an hour to the gym. By the time that you get ready, drive there, work out, drive back, it's 2 or 3 hours. But with a Peloton, you can put on your clothes, jump on the Peloton, maybe be done in an hour. So I think a lot of people will get hooked on them and continue to use them into the future. The next stock that he owns is one share of American Express. Just another really quality company that people are going to continue to use over the years. So they just continue to gain market share. You can see here over the last 5 years, they've just slowly gone up and gone up and gone up. Every transaction you use on your American Express card is paying them a little bit. So I think they'll continue to grow. Just a really solid company. The next stock is CrowdStrike. So this is a company that I hadn't really heard of, but it's cybersecurity. And again, they've just done insane since the pandemic. They've gone up about 100%. I don't know too much about them, and I am not going to look into every company on here too in depth, but they've just done really well. Now, the next one is Square. So they are a company that did really well too. You see the pattern, right? So almost all these companies are up like 100%. Maybe Google is actually holding down the portfolio, right? Because they had 35% return and all these other companies did about 100. But John, I'm not saying that you should sell out of Google. I'm saying that these other stocks have just done really well. Google is a great company though. Square has done really well. They're a payment processing app. They just are doing really well with the pandemic. The next stock is SE stock, which is an e-commerce stock. They again have just done insane. You can see this 250% return. They're just crazy too. I mean, all these stocks have done really well. The next one is Coca-Cola, solid company, always going to pay dividends, always going to grow a little bit each year. I'm not a financial advisor. I didn't say this earlier, but I'm not a financial advisor, so take what I say with a grain of salt. But another great company. As we go down the line here, there are just some other good companies on this list. If we look up SBUX, that's Starbucks. They've done well since the pandemic. MGP is a REIT, so they've done pretty well too. They pay a really nice 7% dividend. As we go down the line, you can just see a lot of these companies are just going up like crazy. I'm not going to break down the rest of these 4 or 5, but they're pretty similar holding sizes, so $100, $50, something like that. I think this is a really good portfolio. I think that it's spread out through several different sectors that are either beaten down or they've just grown a lot, like the tech sector. I think this is a pretty solid portfolio. Now, there are only about 15 holdings, which isn't bad, but a majority of the money is in Google, which I think Google is a great company, but with 30% in any one stock, there's a little bit of risk when you do that, but this isn't a huge portfolio, right? It's not like he has $500,000 in Google. If it goes down 1% in a day, it's $8. So it's not really that big a deal. But I think this is a really good start. And John said that he is looking at retiring maybe around 65. He's not really trying to retire early. He's 30 now, so he has a long time in front of him. So I just kind of like to break down what you'd have to do to invest to retire. So let's say John makes $60,000 a year and he needs to replace that full income in retirement. If he and his significant other both get Social Security of about $1,200, that is about $30,000 throughout the year. So if you need to replace that and you need to cover the other $30,000, you probably need about $750,000. So using the 25X rule, the 4% rule, you need about $30,000 a year. So if you can get up to $750,000 or about that amount, then you should be able to retire very comfortably using that 4% rule with Social Security paying for the rest. So if we look here with about 2,155 with 35 years to retirement, if he just gets a 7% return, assuming he invests about $5,000 a year from here on out, he would be able to get a portfolio of about $715,000. So that's about what he needs. If you bump this up $100 a month or something, that will get you that extra amount. Now, I will say too that $5,000 might seem like a lot, but if you have an employer-sponsored 401k and you guys make about $60,000, you get a 4% match from the amount that you put in. So if you put in 4%, that's $2,400. Your employer matches $2,400. That's about $4,800, which puts it right at what you need, really. That is just about $2,400 that you have to invest to hit that $5,000 a year. And that will get you pretty much to where you need to be in 35 years. So let me know your thoughts on this. Let me know your thoughts on John's portfolio. I think it's a really solid portfolio, and a lot of the stocks that he picked did really well. So I am impressed. That is a really solid portfolio that's done really well over time. Let me know your thoughts on this format. Again, splitting up the videos from what I'm buying and then the review of the portfolio. Thank you guys so much. Thank you for hitting the like button. Again, if you want to start with M1 Finance or Robinhood or Webull, you can use the links down below. Or if you want to join the Patreon to get your portfolio reviewed, we are about 3 weeks out, I believe now. So if you want to get it reviewed, you can join the Patreon, but it will be a couple weeks before I review your portfolio. But we talk about different stocks. I tell you about what I'm buying right when I'm buying it. So thank you guys so much. I appreciate it, and I will see you in the next video. Bye.